Welcome. I want to thank you for joining us today, wherever you are in the world, whether it's morning, which is where I am in the States, evening, or afternoon. It's a wonderful opportunity to connect as a community. We're going to talk about and I hope you're all safe, what the new normal is for impact investing. Today, I'm joined by two colleagues who are guest faculty on our impact investing program and social finance program. Jenn Pryce, who's the CEO of Calvert Impact Management, and Hinton, who's the co-director of Economic Justice Program and CEO of Soros Economic Development Fund. And we're going to really talk about issues that you've raised. We've asked our participants to send us questions. We have well over 75 questions. We're not going to get to all those today, but we want to have a conversation to address your needs as a community and our experiences going through impact investing under Covid-19. So with that, we'll get started today. Next slide, please. I want to ground you again, since we're all in our homes for the most part, locked in, and looking at the scenes of Oxford, reminding us how beautiful it is and how dreaming is important and imagining what's possible. Oxford has, again, 800 plus years of history, survived crises, and it's good to remember that. We'll get through this together. The purpose of these impact series have traditionally been to really explore issues facing our community. We've never experienced anything like COVID-19. So this is an opportunity for us to, in real time, address how impact investing can shape our future in complex times, to share our ideas and our challenges, to find a sense of community through our global network, what we can do together to create change, systems change, how we can support ourselves, and how we can remain a strong community with compassion, energy, and ideas. Next slide, please. Again, here's a reminder for those alums who have been to Oxford at Said Business School. Many people, it was lovely to see you sending in your questions. Alvin, Padmini, Curtis, Keith, Julie, among our alums who have been always active in our community, and I'm really pleased that you're joining us today, as well as our future executive education students who are joining us, Jiffy and also Safak. So it's fabulous. And again, the purpose of what we do as a community at Said Business School is to really create world-class community of programs and ideas that will have global impact. And what better time to do that than right now? Next slide, please. We offer in our impact investing portfolio, or our impact portfolio, 3 interconnected programs. Impact investing, which is scheduled to run in September. Social finance, which is now in February of 2021. And impact measures, which is also, I think, in January of 2021. Impact measures has really been traditionally focused on helping create funds, being very targeted and focused. Social finance is actually the spectrum of how you use capital to create systems change. And our social finance class in February will be very tactical and specific on how you create partnerships, to create blended capital partnerships using philanthropic, public sector, private sector resources at scale to address challenges of climate change, to address climates of economic issues and health issues of COVID-19. How you package deals at scale, moving beyond millions to billions, and with intentionality. We'll be teaching partnership and negotiations, as well as the nuts and bolts of how to do deals at scale. Impact measures, again, sits in between both programs, and it's an opportunity to learn how to measure impact. We will address those issues in in how you measure impact and impact investing as social finance, but a deeper dive in impact measures. So we're targeting social finance as how to do blended deals in crisis. And we hope you'll join us in February. Next slide, please. We think about our work in systems change, and we think about the interconnectedness. And when you think about COVID-19, you see the consequences of health, economics, personal security, political security, food security, all of these systems at play. And how does capital move that system in a dramatic way to actually meet the needs of those most vulnerable and all of us at the center of the circle? And so that's our strategy of how we use capital to create systems change. We also think about leadership and talk about and teach leadership strategies. Right now, more than ever, we need the characteristics of what we call deliberate leadership: compassion, courage, collaboration, sense of community, building deals from the ground up, candor, what's working, what's not, how can we be transparent and accountable, creativity to imagine new scenarios and imagine that we are leaders in this field moving to a new place of uncharted territory, but really essential territory. And those characteristics, how you achieve your own leadership in the context of community and collaboration, is absolutely essential. And we're going to talk about that today with our colleagues. Partnership collaboration is absolutely essential of how you blend capital to create and work together in ways that we've never done before is going to be even more essential. Next slide, please. Again, I'm showing you our community, and I'm sending all of you, well wishes and security and safety. We have a vibrant community of representing 90 countries of colleagues I consider friends, and I keep safe. Next slide. Here we are, Gayle Peterson. I direct the Impact Investing and Social Finance program. I'm also Managing Director of PFC Social Impact Advisors. I do research, consulting, and teaching and coaching. Jenn Pryce, again, there she is with her smiling face. You'll see her shortly. Again, President and CEO of Calvert Impact Capital. And Sean, we'll see in his library office, co-director of co-director of the Economic Justice Program and CEO of Soros Economic Development Fund. Next slide, please. In terms of projections and reality, some headlines. Again, we know the statistics, and they're sobering. Impact of COVID-19 could cause equivalent of 195 million job losses, according to the ILO. 49 million people could move into extreme poverty worldwide, 136 million health and social professionals on the front line dealing with COVID-19. Its size and scale, and yet at a local level, we feel the pain of all of that. Impact investing has the potential, we believe, to redefine capitalism, and that morality matters when it comes to money, and how we spend those resources wisely is essential. We're also looking at sustainable funds are weathering the crisis better than traditional funds. Bloomberg analysis found that while ESG funds fell 12%, that's significantly less than the S&P 500 index over the same time. The coronavirus is motivating governments, companies, international bodies to lean into social finance, and that includes philanthropy. Next slide, please. Here's an illustration. There was a recent article in Foreign Policy magazine around social bonds. Here's some illustrations of where those partnerships are coming together. In China, the IFC and World Bank issuing social bonds at significant levels. $1 billion for a social bond, the largest to date, to boost production of medical supplies in emerging markets. African Development Bank sold a COVID social bond for $3 billion. Again, these are large denominations to have significant scale. So Spanish Bank BBVA, again, is issuing green bonds, social bonds, and sustainable bonds. So we were watching an increase and an uptake in the market, and we'll provide more of that information on a blog that we'll be doing that'll be posted both on LinkedIn and on the SBS website in the impact section. So next slide, please. I'm going to turn it over to Jenn and to talk about her experiences. And the format for today is Jenn will give us a little introduction in terms of what she's doing, her perceptions of what's happening from on COVID-19, turn it over to Sean to give us a similar orientation, and then we'll open it up for the three of us to have conversations, taking your questions and helping, I hope, get you the answers that you want and stimulating conversation. So we'll see you in a few.
Thank you, Gail. You can hear it, right? That is a yes. This is Jenn Pryce, and it's a pleasure to be with you all this morning. As Gail mentioned, to know that some of the prior colleagues are on the line from when I've been in Oxford is just really heartwarming at this moment when community is so vital. So good to be with you all. For those of you I don't know, I just wanted to give a bit of an overview about Calvert Impact Capital so that you can understand the perspective I bring to this conversation. You know, simply our mission at Calvert Impact Capital is to use private capital to create sustainable and equitable outcomes. So over the last 25 years, we've been selling financial products into the capital markets. Our community investment note is likely the most well-known product. That is an open-ended fixed income product which investors buy. We invest the proceeds in communities around the world. Over time, we've invested about $2.5 billion in this program, through this program. And today we have investments over 100 countries and across all sectors. So we invest in intermediaries and funds that then lend to businesses in place. Also, we run a syndication business, and we've managed money on behalf of others as a registered investment advisor. And really important, we also open source our learnings to the field through thought leadership. Much of this work is focused on gender, blended finance, and structuring. Structuring with a goal to move money more effectively and efficiently into under-resourced markets. And that brings me to the first slide you see. Just stepping back for a moment, I have a few slides to share today. This first one is really talking about how money moves. And then I wanted to take that into a particular moment in time, which is today, in a COVID relief effort that we are working on deeply and in partnership with Sean, who will come after me at OSF. So this slide is really, thinking about and what we've learned of how to move private capital effectively and efficiently within our existing economic system and reach people and communities. And we found that to really do that well, you have to have an understanding about how the financial system works. And so the slide you see here on the left are the investors, global assets under management, 70 trillion. That's all of us. People have money sitting in savings or retirement accounts. Go over one brick and you see advisors and institutions. These are the entities that are managing money on behalf of hundreds or thousands of people. So for example, a pension fund that manages money on behalf of its beneficiaries, or an insurance company that manages money of its policyholder, or even a wealth advisor that helps a family invest their savings. Move over one brick and you'll see market-facing intermediaries. These entities are the ones that are structuring, building, and selling products that meet the requirements of advisors and institutions. So the considerations that they're thinking about day in and day out are things like liquidity, diversification, risk return profile, and volume. The funds that these market-facing intermediaries raise are invested in community-facing intermediaries. So that's now moving one brick to the right. And these are the groups that are investing directly into businesses and individual or assets that traditionally are not invested in by the capital markets. They're hard to reach. They might be unknown. The perceived risk might be higher than the real risk. And so the capital markets, traditional banks, they don't go towards these community-facing intermediaries. This is the heart and soul of impact investing. And what these entities are doing is really addressing the market gaps in communities and tailoring solutions to meet local needs. They're often providing advisory support as well as capital. So taking this frame I just wanted to give you, how can we leverage this knowledge of how money moves in this moment of time? Next slide, please. What I wanted to share with you is one effort, as I mentioned, that we are working on now at Calvert Impact Capital. In general, we have 3 efforts we're working on that are relief, 2 in the international markets, 1 in the US. These next few slides are to share the one in the US, but I'm not sharing it to go into the weeds of the deal. I'm really sharing these slides to share the principles that are guiding our work. And I think those principles are applicable to any situation at this moment in time and beyond. We are doing this work here in the US, as I mentioned. It's a partnership with a community development financial institution. The acronym is a CDFI. The CDFI we're working with is CRF, Community Reinvestment Fund. If you're unfamiliar with CDFIs, they were established about 30 years ago in the US. They're a type of unregulated bank to serve those not well connected to existing financial systems. They can't walk into a bank and get a loan easily or access the capital markets. CDFIs invest in affordable housing, school construction, community facilities, as well as they get money into the hands of small businesses. And that point is really important right now, the small businesses in the work that we're doing. And so what this slide is doing is, why are we engaging in relief work? This is this grounding slide of why. And what we're seeing in this moment of time with the onslaught of COVID-19 is that it's really crushing community-based organizations. So if you recall from the slide before, the community-based organizations are the ones facing the community. And if we wipe out those guys, we won't be able to reach people. In a sense, the pipes will be broken. And if you look at the visual on the left of this slide, you can see what we're seeing in the US, and I think this does mirror what we'll start seeing in emerging markets, is policies and other relief efforts are very top-down. They're reaching a good segment of the population, but as we're seeing here in the US, smaller, more underserved, the traditionally underserved segments of the market are not being reached. And so that's the focus of the work we're doing. And we're finding that that's really vital. And we believe deeply that the risk of this moment is we don't support the infrastructure to reach those communities, then the inequality gap could widen. So next slide, please. How are we reaching the small businesses? To reach these small businesses, we are leveraging existing infrastructure, as the title of the slide says. And just again, this is another universal guiding principle that we've been carrying throughout our work. You'll see that this slide mirrors how money moves, the slide I shared to before. On the left, you'll see in the work we're doing, the investors, the banks, the foundations, and the families. That investment capital, we're capturing their capital in a structured fund, a blended finance vehicle, so that sits behind those 3 bricks, and investing it through leveraging technology to identify and process loan applications from the CDFIs. That's the 3rd column over, to get money to people in place. And so really important to get to market quick and to do it at the scale that's needed. Again, leveraging the existing infrastructure is extremely important. Moving to the next slide, a few other highlights of how we're working. Collaboration. In the work that we're doing in the US, these are the types of entities that are all coming together. Public sector allies, national CDFIs, local CDFIs, banks, philanthropy, and enabling technologies. And what we're looking when we think about collaboration is at what every organization does best and plugging that in. So everyone is critical, no one is working on something outside their comfort zone. And what we're finding is, key here is not only to collaborate, but to create productive collaboration. So, just 2 things that we found that keep collaboration working positively and productively is 1, have common goals and values. So we're staying focused on the audience and common values across these partners, and we address any issues along the way. And importantly, we're finding when there is any conflict, the question is always, what is best for the communities we are serving? The second kind of guiding principle is no martyrs. So we're not looking for organizational martyrs. And what I mean by that is it's important to make sure that this, whatever this is that you're working on, is working for everyone involved, that it meets their impact and financial goals. Next slide. The last just facet of the work that we're doing that I wanted to highlight is, shared on this slide is our goal is to create a systemic solution. So in this case in particular, it is to pursue and leverage private funding. And that's the huge, kind of the balls you see moving from left to right. If you look to the right, what we want to eventually tap is federal government. So we're moving from a private funding to demonstrate, to show need, to pilot, to move what we hope would be eventually a federally funded solution. This is a final thought from me. I really believe that what you see on the slide is the ultimate goal of impact investing. It is to bridge to scalable systemic solutions. So here at Calvert Impact Capital, we do all our work with an eye to the future in regard to whether it's a policy solution that we're bridging to, and maybe impact investing is a demonstration, or to banks, for which impact investing is showing that these are investable assets. But in all the work, I do think it's really important to assess what are we building a bridge to. Gail, I'll turn it back to you.
Sean, you're on.
Fantastic. Well, I am hopefully visible and audible. I'm not going to use slides. I'm going to, if it's okay, just to sort of share a little bit of background about who we are, and then about how we've been responding. You may be familiar with the career and the some of the history of George Soros. George's work as an investor and a trader generated a significant fortune. The Open Society Foundations is the philanthropy that George built over the course of his career, and I lead one of the divisions of that global philanthropy, the Economic Justice Program, and also head up the impact investing team, the investment team that provides the investment function to the philanthropy. We don't invest and have responsibility for the entirety of the endowment. That's handled by our investment team at Soros Fund Management, but we have stewardship of the tool of investment in the context of a large foundation with over $1 billion annual budget. And so, the work of Open Society Foundations is primarily focused around deploying grants in support to civil society. We have a significant presence in various aspects of advocacy for policy change. And the third tool is the use of impact investment, which is a means for us to engage with the private sector. So I give you that sort of context to say that we deploy capital. We make about $100 million of new investments each year, typically in investments between sort of $5 and $15 million each. And we do so not so much with a blended view to the outcome, but with a absolutely exclusive focus on impact. We deploy capital in service of the goals of the Open Society Foundations. And I mention that because it's important context for what I'm going to say now, and also for, just to recognize that the type of capital we have, our ability to take a view on risk, the primacy for us of impact and outcomes is a luxury position. It's a we recognize that it comes with its great degree of privilege, and that is not true of all the forms of capital in even the broad church that we define for impact investment, but it does matter significantly for how we approach things. So we did the sort of immediate step back, as everybody did, as it was sort of unfolding for us, and tried to think as best we could in grappling with the sort of magnitude of this as to how we wanted to respond. And we sort of thought about this in four buckets, if you like. The first, of course, was just the instinct to take care of the people that work for us and the people that work for and are touched by those in our portfolio. And it's a sort of an obvious thing to say. I guess everybody's put out their COVID-19 response sort of letters. The world is awash in them. Someone will write a PhD on it at Said one day on the nature of those response statements. But I mentioned the people one first because I think it's very easy to lose sight of why we're doing what we're doing, protecting companies or institutions or these sorts of things, which I think, if anything, we realize now matter only to the extent that they have people or touch people or are impacting on people's lives. So the first was around people. The second was about our portfolio. We did an immediate review of all of the investments and the portfolio companies. We looked to restructure debt arrangements in the debt part of our portfolio. We have about 20% in various forms of sort of impact debt, and the rest is mostly equity. That's both direct and indirect. And I should have said, we have a global portfolio. We have investments in over 20 something countries around the world. So the second was to immediately sort of review and triage our portfolio and understand where we would need to make changes in our expectations, changes in response. We provided some technical assistance to one or two of our investees in the portfolio, and we sort of took a look to understand the impact on the people in those businesses, but also, on our portfolio. The third was our pipeline, was to ensure that we didn't miss a beat. We felt it was very important that we not only assessed as best we've all been able to day by day as the sort of magnitude of this has become clearer and clearer, but that we were so we wanted to understand very carefully the investments that we were about to take to our investment committee or about to underwrite had been properly assessed for the impact of this on them. But we felt it was very important that we didn't freeze up, that we didn't stop, that we kept moving, that we kept investing. And so actually in April, we made $38 million in 6 new investments, which for us is 40% of our annual allocation, and in a single month is by far the largest that we've ever done as a small team that we are. And so, I think that's sort of important, both in terms of keeping things going, but very much as a sort of message of confidence in and our continued participation in markets. Markets rely on optimism, on a belief in a better future. Otherwise, why would you invest? And so, we felt it was important that we continued with our pipeline work, that we continued to sort of move money. The fourth thing was our pandemic response. So this has been the area where we sort of stepped back and said, well, now the world has changed. What do we do with our capital? And I will say the first thing, as we looked at immediate response, was to be quite skeptical about the opportunities we were seeing, and indeed whether or not there was significant opportunities for the use of at least the sort of capital we have at this moment of crisis. And the reason I say that talk about that skepticism was, is because of the scale of the change in the world. And I think as Jenn very eloquently outlined in the chart, which I can still see, I guess is still there for others. We don't. By the way, I don't think we. If we're moving on, we probably don't need it. The slides anymore now. But as she laid out, a path to these sort of major systemic responses, and being very selective and very kind of careful about where that path really exists and where one is making a sort of token response. We took the view in the immediate weeks that actually the biggest impact we could have was less with our investment capital in the first instance and more with our voice. And so, rather than us putting 10 million here, 20 million there, what we focused on was lobbying efforts and supporting those in the field who were trying to unlock significant amounts of money, in the case of the US, in the case of the UK, and in other places in the world, for large-scale deployment of public finance. Because, that, I think, knowing who you are and knowing where you fit in the world and knowing what your tool that you have in your hand is useful for is a crucial, that sort of self-awareness is a crucial part of being a good impact investor. And part of that means knowing where it isn't the right tool. And so knowing that moving the needle to $135 billion of money into the CARES Act and working with partners like Calvert and others to focus as much of that in ways and onto platforms that could be accessible to small businesses, to businesses in marginalized communities, etc., felt like the highest impact thing for us to do. And so one of those efforts where we used part of our voice and we used some of our grant capital as a foundation was to support and collaborate with Jenn and with the other CDFIs and these other platforms. Then as we moved to investments, we focused on access to medicines, diagnostics, and vaccines. We focused on SME finance, where finance is needed to keep the economy going. And now we're looking at opportunities to build that better. So opportunities for redevelopment and rebuilding. What are the opportunities this moment affords? I'd love to talk some more about access to medicines. We've been involved in and are working ongoing on work around vaccines and diagnostics. The massive problem of access to those in the global south, the behavior of companies, the overreach and the commercialization of this moment by big pharma and others in the sort of space are all things that deeply concern us. And those have been the factors that have informed where and when we've chosen to invest. If we could move quickly and we could provide capital that would come with significant access requirements attached, then we felt there was a moment and an opportunity for us to tip the balance. Anyway, that's a bit of a highlight. I want to make sure we have time for the questions. But that's what we've done. The final thing I want to sort of leave, the note I want to leave you on, is to do with how we've recalibrated and rethought at this moment about our risk and our impact evaluation and how we do that. We are, as I say, from a privileged position, long-term believers that the idea that there is no trade-off between impact and risk, that there is no trade-off between return and expectations and what one can achieve in certain circumstances, it's a fallacy to imagine that there is not a trade-off. And in fact, being clear when and for what reasons you are prepared to take outsized risk, you're prepared to moderate your return expectations in order to achieve really important and systemic impact is a crucial factor, I think, in capital being able to really meaningfully address these questions. And I think that the scale of the problem has led us to, it has only highlighted that for us. And so we have, we are ready to take on, for example, in the financing of the pre-production of vaccines at scale, hundreds of millions of units, for vaccines that have yet to come out of clinical approval and clinical trial, which represents a massive risk. We're prepared to take those kinds of risks because of the scale of the impact and the opportunity. And that I think has been an important moment of reflection for us about what matters to us and what it is that we really what this capital is really for. So I just sort of leave on that note and hand over to Gail.
Fantastic. Thank you, Sean. I appreciate it. Jenn, we need to see your shining face. How about that? We want to open this up to a conversation. And again, we've had 75 plus questions and they're still coming in. And the reason that Jenn and Sean are our guests today, really because they've been in this field for decades, and providing catalytic, we use that term a lot, catalytic capital, to address the needs of the most vulnerable. We will also be showcasing the work of our other colleagues who work in traditional finance, big banks, pension funds, and government. But I think they're on the front lines of social change and systems change. And some of the questions that we've been getting are, I'll read one from Curtis, who was in our social finance class in 2017. COVID-19 exacerbates the tremendous inequalities in society, including access to healthcare, education, and work. Do you think that major financial institutions of the world, controlling trillions of dollars, are starting to embrace a more socially impactful form of capital allocation? Or do they continue to see things in short-term lens of risk-adjusted, purely financial returns? So is the market, traditional finance, actually shifting? And is this an opportunity for impact investing in social finance to move the market to create systems change? It's that opening the door for big thinking and big ideas. So thoughts, and we've been doing interviews. Our team has been doing interviews with 45 to 50 representatives from big financial houses. So I'll share my perspectives on that. But Jenn and Sean, thoughts? Oh, John, I think you're on mute.
Thank you. I did. A few global thoughts. I think that impact investing is getting tested. This is our first real test as an industry. This is big time. And so can we step up? Can we offer? And this is the key piece. And, you see how I think with the charts I shared earlier, but can we provide access and accessibility for large investors to reach the type of investments that can really start to stem inequality? And so I think that's the question. And again, that comes back for me to really understanding how to create financial products or how to create pipeline that's very suitable for that type of capital. And generally that comes back to collaboration, both with people that understand structuring and how to bring products to scale, but really important, understand community. So bringing those two facets together so we can really respond to community need, not just simply market demand. I am optimistic though, that I see a lot of financial, kind of pure financial money on the sidelines wanting to come in. It's just how they get in, I think, is the bigger question right now.
Sean?
So I think the question is, will this pandemic trigger a sort of an awakening and a growth and an opportunity for impact investing and for social finance of the sort we're talking about, or will we see a sort of a retreat to old behavior and a retreat to sort of bad behavior and indeed, markets moving the other way? I think the answer is yes. Both of those things are going to be true. Both of those things are going to happen. I agree with Jenn. I mean, if this is not a moment where people look in the mirror and ask themselves, what really matters? Why am I a steward of this capital? How do I get up and, look in the mirror in the morning at a very personal and I think really at a very sort of moral level, then nothing will. This is a unprecedented global experience that causes us all to re-examine our values. But if you ask me whether I think that we're going to wake up and go back to work next week and the financial institutions of the world are going to behave in better and more thoughtful ways and that capital will be deployed, I absolutely don't. I think in many ways it will accelerate some of the most damaging and dangerous trends that we've been seeing. Not only the, hundreds of millions of unemployed that are going to be left at the end of this, who won't be from the banks and those sort of higher ends of those institutions. It won't be from the 1%. So not only will it sort of double down on the concentration and the inequality that's already going on, but there will be an inevitable, I'm sure, recovery where markets will retreat and will then seek to gain back ground lost and will revert to their old ways. So I fear that it's going to be both of those things. I do think that there is an opportunity in the midst of this already to begin to hold accountable and show opportunities for change. And I think if we look at access to medicines and we look at pharma, which has been an industry which has been so troubled by the worst excesses of sort of vulture capitalism and the worst excesses of private equity in many cases, and the worst retreats from public financing, from the role of government, from universal health care and sort of basic human rights, then I think that there is a massive opportunity for us to show people at a moment where everybody gets it, how it can be done differently, how how intellectual property can be held, how it can be exploited in a way that puts people first and communities first, how we can make sure that countries don't hoard vaccines in the way that they have done in previous pandemics without anybody noticing or particularly caring. So I think there is a big opportunity.
I think this is again a gray area. What I find really heartening is that in the conversations we've had with colleagues who control from traditional banks, one colleague said, I need to understand how to deploy $1 billion. I need a navigator to help me provide those products. How do I reach out? What do I do? So you've got traditional finance in many cases saying, I know I need to work at a community level. I understand these are different times. What do I do? So how do we begin to create those relationships where products can be developed quickly, relationships based on community needs can be established? That's the open door. And I think that protecting a portfolio and fiduciary responsibility is always there. But I do see a risk tolerance if we can, in fact, accelerate building those relationships with colleagues on the ground, whether it's Calvert or whether it's open society, to actually build those different relationships. I think that was really encouraging. We're not running away from it. We're actually embracing it. But what we're finding is we need people to help guide us in that work. Now, who people choose to guide them is going to be essential, and how we build those relationships quickly while the door is open. And sadly, coronavirus is going to be with us for a while. But the here and now, I think, is important. Opening those doors with accountability and integrity. And I think, getting to another question around morality and leadership. And Sean, I think someone referenced a tweet that you did on the need for moral leadership in the arts. And a colleague asked, how do you both incorporate moral leadership into the work that you do?
There's a tweet by my brother.
Oh, your brother. Needless to say,
I retweeted my brother, but I will totally take ownership of it because it's really good. But that's my brother who runs
you on the spot here. How do you in fact incorporate that into your work?
He runs quite an important.
Simon. Well done, Simon. Yes, go ahead.
That's a great question. How are you incorporating these insights and reinventing the SEDF investment approach to enable moral leadership and structural change at investee and investee board level to ensure a COVID-19 response is climate friendly, protects the world's poor, and that enables? Yeah, well, thank you. That's no pressure at all.
No. And if we need to go to another question, we can come back to it. Your brother will be looking after this.
Look, I think that the point of that article and that tweet is that we have to ask why we do these things, not just what we do, but why we do them. And you know, that the comment about putting people before companies, the notion of understanding, you know, do we care about the company and the corporation, or do we care about, in this case, the art that is produced, the transformation of society? Do we care about outputs, or do we care about outcomes? You know, those are questions that are very familiar to many of us working in other areas, not just in the arts. And I think that we are trying to do our best to make those decisions and to, you know, in the eternal questions of trading off the various things, the various sort of factors that we trade off. I think that we have been thinking a lot about questions of board leadership, about where we are in other parts of our portfolio. Also, you know, we are doing quite a lot of support for organizations that are mobilizing investor and shareholder advocacy. And, you know, there've been some quite important changes. JP Morgan, after quite a lot of pressure, have made a change in their board roster. There's growing pressure on a number of major corporates in the extractive industry to change board members and to change board leadership in order to, and so we are, you know, we are conscious that there is a moment of opportunity for shareholders, you know, in the public markets to become far more active and vocal in that at scale. I'll let Jenn come in, please, and then
I'll just share from a personal level what we've been doing at Calvert Impact Capital. It's heightened communication and clarity around what's our North Star at this moment. And if you want to see an example of that, we just released a shortened version of our strategy, which we had penned before COVID-19. This shortened document, 7 pages, but there's a cover page putting it in the context of COVID-19. And within that cover page, we identified 2 questions that we universally, board and staff, are asking ourselves as we make decisions. And they go to the heart of the question here. So just keeping our North Star, our high communications and our mission front and center is important. And it might be acting counter to what the masses are doing. And in our case, where we're feeling the tension is very simply, a lot of capital is not investing right now. It's sitting on the sidelines. And like Sean, we are putting up about 80 or 90 million of credit approvals this month. So it's large. And there's going to be a point, I believe, when my board says, is this in the best interest for the company to be doing this much money out into communities? I have an answer to that, as you can imagine. But, you know, this is when the rubber starts to hit the road, is, you know, doing some of the things we're doing now is going against what maybe is common, or more. Warren Buffett even said yesterday at his annual meeting, I'm sitting on cash, right? So, you know, we're working a little counter to maybe where society is sitting. And so going back to your mission, going back to the people and putting that first is really key.
Yeah, no, that's great.
I just wanted to, Jenn, I just wanted to pick up on one other point that Gail, you made just earlier, which was about how do we make the contacts? And, you know, now there's this sort of, is there this moment of goodwill, and yet the problem is, you know, people don't know what to do, or they don't have the product, or these kinds of things. And this is not an area of the market. I think Jenn's sort of framework for thinking about the intermediaries, I recognize that more work needs to be done on that, as she said, and on expanding the range of products and sort of things that are available. But, you know, I kind of like, there's always an excuse. There's always a reason why people can't deploy it. Oh, well, the measurement isn't good enough. If only the measurement was a little bit better, you know, because we can't really tell. And, oh, you know, we don't have the product. I think if you don't see the product, if you don't see things to do that are better than what you were doing with it yesterday, you're just not paying attention. I think that there is plenty of smart people. It doesn't take, you know, it's not that hard. Now, doesn't mean to say that we don't have a responsibility to broaden and deepen and improve and to expand and all of those things. But at the scale of, what I think really people are saying is, where are the things that I can do for which I have to make no trade-off, where I can continue business as usual and do a little bit, and that I'm not sure it is there. Well, there'll be some of those things there, but the fact is that in an incredibly low interest rate environment, markets of massive uncertainty and volatility in large parts of the world that have got to, one presumes, go into significant economic crisis, people are going to have to recalibrate their expectations, and they're going to have to be prepared to take that risk. So I think, A, people have got to pay attention, and B, people have got to do difficult things. Otherwise, there's always an excuse.
Yeah. No, let's go to the next question. We have a few more minutes, and I want to make sure that we've touched on more questions. Next slide, please. The role of government and stewardship of the market and relationship to the development of public policy and market infrastructure is important. Can you cite a few examples of policy mapping so workable themes can be drawn from these experiences? And who are the major players in impact investing in Southeast Asia, and what areas in which they focus? Now, we will be doing a session too, specifically on Asia and Latin America. So if we don't get to those questions, there will be another session that will be targeted specifically on Southeast Asia, Asia market, and Latin America. Thoughts on the role of government at this time?
Huge.
It is.
And this is, we do not have a policy arm at Calvert Impact Capital, but I'll just say a few comments. Is all the work we do is with the thought of policy in mind. I believe that it is an enormous piece of the leverage of changing the markets and changing the status quo. And kind of back to what Sean said, we need disruptive things, I believe, at this moment, just incremental more of what we were doing before. I question, this is a moment where we can do things very different potentially. And that's where I see a real opportunity for policy.
Well, and I think, and Sean, thoughts?
Yeah, no, I mean, absolutely. This is what we're in a position where we absolutely do have a position on this, and this is what we exist for. If ever there is a moment where the vital role of governments, 50 years, 100 years of economic orthodoxy and, partisan sort of views on how to respond to and deal with the economy and austerity have gone out the window in a matter of hours. And one can only hope, and we will be doing more than hoping, that a deep reevaluation of the role of government in the provision of healthcare will come as a result of this, as we see the total failure of privately run health systems to respond at scale to a problem that can only be dealt with in the ways that open and transparent government is meant to function. We will also see, so the role is huge and deeply important, and that's why I think, and I touched on in my remarks earlier on, where where there have been places where we've sort of felt probably our small amounts of impact capital are less effective than weight that we can put on policy and on lobbying around making available large amounts of public finance at scale. And that's going to continue, and so absolutely massively important.
Well, and you've seen again in social bonds, those are being driven by governments and partnerships with large DFIs. So those are becoming major drivers, moving billions. And I think that there have been a number of questions that have come in around what happens when a community doesn't have existing infrastructure but still needs investment, especially in this time of vulnerability. Where do they go to get those resources, and how do they know what's available and on the market, especially when there's so many needs globally? So how does small SMEs and communities that have devastating needs, where do they find the resources? and to do the work that has to be done to protect lives and jobs. Conduits, thoughts, developing countries in particular.
Look, I mean, this crisis is showing us the lack of infrastructure at every level, and the lack of investment infrastructure or the relative underdevelopment of and the blind spots of our financial system and our investment infrastructure to deliver capital where it's needed. It shouldn't be surprising that this will also highlight the inadequacies and the inattentions of decades in that system. I think that, you know, talking about it in the US is instructive, and I should leave it to Jenn to speak more about the CDFI network, which is a long-standing, you know, piece of sort of social infrastructure that we have that, you know, has been systematically chipped away at and underfunded, and, you know, by successive governments of all stripes, and yet at this moment turned out to be the only piece of infrastructure that could deliver government funding, large amounts of public finance to where it needed to be. And even that has been, you know, it's struggled to do so. But with Calvert and others who've done, you know, fantastic work to create platforms and leverage technology that has allowed money to get through those CDFI networks, there has been progress made. I think in the, you know, in the developing world, I see the question about India and other places. Of course, that infrastructure is even less developed. And I don't know the answer. I can tell you some of the small things that we have done, but at scale, it's very, you know, it's very difficult. I'm not sure there is a ready answer that I have.
Jenn, we're going to turn it over to you, and then I'm going to respond in terms of next steps. And Annabelle wants to spend a couple minutes just to talk about resources.
Yeah, I'll turn it to you because I think we're running short, and Sean covered it wonderfully.
Yeah, and I think for us, this is an opportunity. Our community has an opportunity to share ideas. So what we're going to be doing on a blog and LinkedIn, we're going to get to all your questions. I'm going to hold them up here. We've got 10 pages of questions. We'll be putting those on our website in terms of provocative questions, but also responses, and on LinkedIn. And keep sending questions. And if you've got ideas or innovations that you're trying that you want to share with the community, please send them to me at my email address. It's on the website at gail.peterson@sbs.ox.ac.uk. We'll make that available. And but this is the beginning of the conversation, and we will have another series of webinars, talking about these issues. I want to thank Sean and Jenn for their time. Annabelle, I'm going to turn it over to you. But again, I want to say thank you to our community, and we're thinking about you and know that you're doing amazing work, and we'll be getting responses to you. Annabelle, I think you're on mute.
I am, yes. Thanks so much, Gail, and thank you everyone for attending today. As kind of Gail mentioned at the beginning, I hope you're all well and safe in your homes at the moment. These webinars do run monthly. We're actually looking to maybe run a couple of extra webinars next month. If you are not on the mailing list, my email address is on the screen at the moment, so please drop me an email, which just means you'll get regular updates about both our webinars that take place and our newsletter that goes out with up-to-date content of what's going on in the impact sector. There's also been information on programs if there's more information that you'd like to learn about those that are coming up in the future. Thanks again, everyone, for taking part.
Thank you. Enjoy your evening, the day. Take care.